We are live, ladies and gentlemen.
Okay, we are live. Let's see. I need to record this for Max. He wants to use it. Maybe to send it to some sellers as marketing for Lofty. Let's see. I think it's recorded. Content. Back to channel. Oh wow, there's already 15 of you here. Is everyone able to hear me? If someone can give me a, like write in the comments if they can hear me okay. Just want to make sure volume and everything is good. Yes, hello. Barely. Okay, maybe I have to talk louder. Give me 1 second. Let's see. Let me adjust my volume outputs. Hello. Yeah, that should be okay, I think. I might just have to sit closer to the speaker and to the camera as well, and then just overall talk a little bit louder for the stream. Hello, everyone. Thank you so much for joining us. We'll give it a few more minutes, I think, just for other people to come in. They'll probably trickle in within a couple minutes, and then we will get started. So this is going to be the first live stream for Lofty. It's a pretty informal process. I just thought it would be good for me to sort of almost like do a monthly Q&A session. I can talk a little bit about our upcoming features, things we're working on, because otherwise, sometimes people provide us feedback and, we're like, hey, we would love to do this, but we're busy with stuff right now. And it's just kind of all in the background. So you don't actually know what we're working on, and it might feel like we're not working on anything. So I think it would be nice to kind of give you guys one-on-one update like that. Just so you can see where the roadmap is going, what the team is prioritizing right now. And then it's also, I think, a really good space for you to sort of do it, you guys to come ask me questions in a Q&A format. So you can just post in the chat, have any questions about anything I talk about, anything you just want updates or specifications on. You can bring it to these live streams and then just ask me and I'll answer you. If I know the answer. If I don't, I'll be very honest and I'll just tell you, no, I don't know. But I will go find out for you afterwards. So yeah, that's pretty much it in terms of the format and how we're going to do this. And, I don't think a lot of our existing users on Lofty use Twitch on a consistent basis. So, sorry that it's going to be on Twitch for the first one. Mainly because I talked about it in Discord, but YouTube Live has this sort of anti-spam filter, I guess. So when you first try to request going live with your account, it doesn't work, and you have to wait 24 hours before you're allowed to actually use the feature. And I made that request, I didn't check, sort of my fault ahead of time, but I checked last night at like 9 p.m. my time. And so if I waited for the 24-hour limit, we would just end up not being able to do the stream today. So I figured we just do the first one on Twitch, get feedback, see how people like it. And then if we end up doing a second one, I'll probably move it over to YouTube, because at that point the account will be ready to do that. So let's see, we're at 12:04 my time, Pacific time. So we'll probably wait another minute, I think, and at 12:05 we'll start. So overall, I think this stream is scheduled for 1 hour, but we might end it sooner. Again, it's going to be, at least in my mind, pretty collaborative. I don't have an hour's worth of updates for you guys. So mine will take maybe 10 minutes, 15 max. And then at that point, I think I'll just open it up to questions. And so, if we have more people asking questions, I'm going to go all the way up to the 1 hour time slot. But if, we don't have people asking that many questions, then we can just end it early. So yeah, that's the plan. So just give me a sec. I will post in Discord as well. Just a quick announcement and reminder for people. Directly ask me and for me to answer. Alright, copy this. Okay, just made the announcement. Let's see. All right, we got 19 of you guys in here now. So I think we're good to start, because if I recall on the doodle, the people that picked this time slot, it won because it had 15 votes versus the next best one had 14. So I think this is pretty much it, and we're gonna get started. Let me see if there's anything in chat that I can just answer right away. Yes, first question. Why are so many properties selling below 50% of their initial value? That's always a good one. But yeah, I mean, look, Lofty, I think I've explained this before, but what we are is basically a real estate exchange. And we're the first one trying to build towards this. And so we don't dictate price, and we don't know how a property will do like once it launches until, short term, long term, medium term. It's sort of all just variable to us. We don't manage any of the assets. We're not the property managers. Owners control every aspect of the property. If owners are sort of inactive and there are issues, and such is the case with real estate, sometimes capital calls and things are required and people don't participate or they just don't care, then the property will just sit there. Like we will not do anything to it. We will not use our money to fix it. We're not an asset manager. And so I think it's about expectations, where if you come to the platform thinking that, hey, this is like a REIT or a passive fund that Lofty is going to manage for me, then I think you're not going to have the best time, because you will probably purchase things that you shouldn't, and you will probably have sort of not the financial outcome you were hoping for, at least. But the ones that we've seen really succeed on Lofty and tend to make higher than average returns relative to traditional real estate markets are people that are very active. They read every update. They make their own proposals. They not only read like current updates, but they'll often, before buying into anything, read through the historical governance updates and just kind of see like what's going on with the property over like ever since it launched until now. How have people handled different difficulties and situations that have come up, and then sort of do their own calculations also of like, do I think this property is worth the current market cap that the token price would imply? And people will then usually buy things that they think are at discounts, and so they usually end up doing really well. But overall, trading is variable. So let's assume a property has issues and owners are taking care of it, and there are no incoming cash flow, so yield is currently zero. I think people have a sort of a bad habit where they price everything almost like a bond. And so like, even though the real estate itself might be okay in some cases, just because there's currently tenant issues or there's no rent coming in, and in fact sometimes the rent not coming in is because it's replenishing the operating reserve. So the tenant is actually current and they're a good tenant and they're paying rent on time. So those nuances matter a lot. But just when people see the yield go to zero, you'll just see a lot of people panic selling. And so the market prices are driven by supply and demand. And so if you have a bunch of people, just trying to get out of a property and selling, you're going to see the prices go down below their original values. So yeah, that's sort of a long-winded answer, but I think it kind of explains in totality what you see on the market. And then at the same time, to sort of prove that everything is variable and very property specific and dependent, as well as on the owners themselves on how they manage things. If you sort tokens by price, you'll actually see like the top half of the marketplace in descending order are all properties either trading at or above $50 a token, and many of them have been trading at those premium prices, I'll say, so above the original listing price for over a year now at this point. So it's fairly consistent, and you'll just see that like management matters, your due diligence matters, what you buy into matters, and that will continue to be the case on Lofty. So as we expand the supply that you see on the marketplace, just not every single property is going to do well long term, and unfortunately, that's just the truth of a pure marketplace like that. I think I'll end also with an analogy, which is, imagine sort of Zillow as a platform. Like, people browse houses on Zillow. Like, almost every property, every house in the United States is listed on Zillow, even if they're not actively being sold, but you can sort of find the address and find details about the property. Now, imagine if you just sort of didn't do any of your underwriting or research, and you just bought like random houses you found on Zillow. What do you think would be the probability of those properties doing well, or your portfolio doing well long term? Especially if you decide to, log out for a year and then, don't come back in to check on the status, or don't actively participate in governance and things like that. So yeah, that's kind of what I have to say about that one. I guess next question is, how can we get Lofty fees included in the tax forms so you can take full advantage of deductions? Yeah, I mean, I don't think there's much the owners need to do on their side. I think was sort of, number one, a situation we weren't completely sure how to handle. And we probably should have investigated more, but it was just the idea of like, hey, like, is it even legal? Like, would it make sense? Would you survive an audit if the IRS audited you and you added Lofty fees to your cost basis? Now, there's like an important distinction and nuance here, which is that traditionally, if you purchased a house and there were like agent fees and commissions in real estate, that would be fine. Like, the IRS would not care. Your CPA would tell you like, that's totally fine. Go and do that. The problem though is the way our platform is structured. Lofty are not, like, we're not real estate agents. We don't collect commissions because it's actually illegal for us to do so. Instead, what we charge you for is the usage of our front end interface to make trades through these smart contracts for the real estate, where you can like buy and sell ownership in a very frictionless and very fast manner, right? That's sort of the like technical value that we build and we provide, and that is what we're charging you for. In reality, you don't really even need to use us. Like, if you find another Lofty user and you're both like, physically in front of each other, and you're like, hey, let's do a peer-to-peer trade. Like your tokens aren't blocked. You're allowed to do that, and there would be no fees associated with that transaction at all. And so, knowing that is technically, and the way we structure that, taking a step back, again, is for regulatory reasons. So knowing that, like, that's how our fees are technically structured and what they're for, we just weren't 100% confident that you could actually use this add it on top of your basis, because it's seemingly like a very optional fee that you pay, right? Because you technically don't have to with peer-to-peer trades. Whereas, real estate commissions, usually if someone has a listing agent, like, you have to pay the commission by law. So that's sort of the distinction there. But, we're just trying to get clarification now, like, conclusively, like, hey, can we include this for our users? And if the answer is yes, then we're just going to do it. And I don't think you guys then have to do anything on your end. It's all back-end platform updates. I have to check if we're even storing the data for the fees. But even if we're not, the thing is, we know when fees have changed over the past few years, what dates we release those fee changes, because we have historical announcements we can go back to. And then on top of that, we also know exactly, what value those fees were. And so like worst case scenario, we can sort of like reverse engineer historical fee data for all of your past purchases and sales and things like that. Um, and we do store this information, which is that we know if something was a limit or a market order. So that's basically all the information we need to sort of add this in for you guys, both retroactively and moving forward. So yeah, we're just waiting on the go ahead, and once we have it, we'll implement this, and you guys will see it just automatically added in, and there shouldn't be anything else you need to do. Okay, let's see what else. Okay, so there was another person asking about, I think, referral fees. So yeah, that's a good question. I don't think the bonus was $500, but I'll double check. Again, like, look, we're very honest. Sometimes things happen and we like forget or didn't realize it happened. There's because too many things happen. But if you can provide us proof that we had like a one-time promotion, or something like that, and we check that you did in fact satisfy those criteria, then obviously we will pay you your bonus. But like that's if your question was referring to like one-time sign up bonuses, because otherwise the referral program, I don't ever recall us paying out $500 per referral. We did have a very consistent referral program where if the person you referred spent at least, I think, $250 within a month, during after they signed up, then we would pay them $100 and we would pay you $100. So that would be 200 in total, paid out to both the referrer and referee. So that program currently is on pause right now because unfortunately a small number of people end up ruining it for everyone else. There was sort of like a scam ring that was like taking advantage of this, like, oh, just refer people and like maybe even make duplicate accounts yourself, then use a referral gift certificate to purchase tokens and sell them immediately using a market order, get the USDC cash funds, and then like take the money and just keep doing that, rinsing and repeating, which is just draining money from the company. And so I also announced this before, but that's paused right now, and it's going to be one of the next things we overhaul, and then we're going to bring it back. And so this time when we do bring it back, there's going to be lockup periods for people who are referred to the platform, meaning that if someone referred you and you create an account, yes, you will receive a gift certificate to purchase any real estate on the platform and make an investment. But when you make that purchase, you won't be able to sell them immediately. They'll be locked up in a smart contract for some arbitrary amount of time. We haven't like finalized it yet. We're thinking 2 months, 3 months, something like that. 3 months, a quarter probably seems pretty reasonable. And during that period, you'll still be able to vote on governance. You'll be able to collect rental income. So you still get all of those benefits as an owner, but you can't sell, unfortunately, with the amount that you purchase with the gift certificate. And then after your sort of lockup vesting period is ended, those tokens will actually be sent to your Lofty wallet, at which point you have full control over them. You can stake, you can sell, you can do whatever you want. So that's kind of giving you guys an overview of what will happen with the program once we bring it back onto the platform. So yeah, that I think answers that question. Yes. Zycor, what's with the empty room and where are my furnishings? Good questions. So I just moved my office into this room. I don't know if you can see, but in the sort of corner over here, you'll see like some little books and things. So this actually used to be my son's nursery, and if you look over there, you'll see like a little blue cover, and that was his actually like changing diaper station. So there was no furniture in here because it had a giant playpen, and it was just like a room for my son. But now he's gotten a bit older. He's moved to a different room to play in and sleep, and that's become his new room. And other than a desk in here and these old closets for bookshelves for storage and things, I just haven't really furnished a room. So that's why you're seeing an empty room. Can I confirm? Let's see. Next question. Can I confirm that Lofty will not let multi-DAO votes go out? Yeah, so we've had this feedback sort of repeatedly in the past where and I think a lot of things on Lofty requires a ton of nuance, unfortunately. So I'm going to try to dive into a bit more detail on at least how we think about it, and how we're going to do things moving forward. So, for example, in the past, we have done platform-wide updates. So people, if you weren't here, then you won't recall this, but if you were, this will be familiar to you. So when we move the tax process over from having individual K1s per property you invest in, and that obviously caused people a lot of headaches if they had a bunch of properties in their portfolio, over to the 1099 process, there was actually a governance vote for that as well. And it was basically sent out to every single DAO, and it was sort of a platform-wide vote to change certain processes. And similarly, when the DAOs purchased insurance, there was also a governance vote that went out, which was that if you have one master policy for the real estate insurance and every single DAO was under this master policy, then on an individual DAO basis, your insurance cost would be cheaper. And so it was just a vote like, hey, owners, do you want to do this or not? That also went out to all the DAOs. And so there are certain things that kind of do affect all the DAOs as sort of a blanket policy change on certain things. And so those, at least how we think about it, is like it makes sense for those to be multi-DAO sort of platform-wide votes, just like in general. And so if you disagree with that, I'd love to hear your feedback and like why you think that's the case. So those were the times we allow multi-DAO votes to go out. And then there have been times when we allow sort of more specific votes about specific property managers, but if they had multiple properties managed by them, we had multi-DAO votes go out as well. Now that's kind of where owners haven't really liked that and said that's sort of unfair, and I don't want another DAO controlling the voting outcome of my DAO, which makes a ton of sense. We totally get that. So I think moving forward, those kind of specific votes that are not platform wide will never be like a multi-DAO vote. And so here's where I want to be very clear about that. The vote itself, the proposal, will still go out potentially as a multi-DAO vote, meaning that it will be sent to all the DAO owners at once with the same list of options and the same proposal. But we're not going to tally up the results in a cumulative way anymore and just say, hey, if this passes, like, hey, let's say, the number one option was to do X, then now X applies to every single DAO. Instead, what we're going to do is tally up the votes individually per DAO, which means you will actually end up, even though it's like one vote going out, you'll have different results. You'll see like, hey, DAO A voted for X, while DAO B, if you tally up their votes, actually voted like option Y won out. And so you'll have this one vote, but you'll have like multiple outcomes per DAO. So I think that's what we're going to do next, and we'll see how that works out. I think people will be okay with it and be pretty happy, because I think what people care about is not necessarily the proposal. And again, correct me, if you think I'm wrong about that. I think what owners care about is the result, in that they don't want the results of another DAO and votes of another DAO to sort of change the voting outcome of their DAO, right? And that I think is very fair. So that's what's going to happen moving forward. So I hope that answers that question. Okay, so another tax question. Oh, geez, these are fun. So as a small aside, I always think it's kind of funny. Like, I thought the stereotype was everyone hated taxes until we built Lofty, and like our internal joke is like the IRS should love Lofty users, because I've never met a group of people more interested and obsessed about taxes than Lofty users. But no, I get it. It's important. So, and it is an investment and it affects your income. So, I totally get it. I just still think it's kind of funny and interesting. So is there a way to depreciate the home under the LLC before the 1099 comes out? So I think this is kind of a misunderstanding because that is already the process. The way it works is your forms are like algorithmically generated at this point, and it basically takes all the gross income of the DAO that is recorded from the DAO's accounting side, like how much rent did it actually pull in. So all the gross income. And then, based on just standard real estate deductions, operating a rental income, there are certain things you can just add on as expenses over the year. Like, oh, we made this income, but the DAO had to pay for all of these things to maintain the property and yada yada. So they on paper deduct from your income. And then once those standard deductions and expenses are taken out, you get the net income, of the DAO, sort of net revenue from an accounting perspective, if you want to think about it like that. And then we actually do calculate depreciation. So this is using a standard straight line depreciation. I think it's like it's weird to pronounce it, but it's like the macros method. I think like 28 years, something like that. And the depreciation expense for that tax year is then added as an additional expense under net revenue. And then so you take net revenue and then subtract the depreciation. And that gets you the final net profit of the DAO. At which point, sometimes that's either like a very low number in many cases, or it is in fact negative. So not only do you guys not have to pay taxes, those negative numbers will then, through accounting wizardry, translate into your 1099s and then also both the div and also the 1099B form. And you'll actually be allowed to use your 1099B to offset income from other sources. So it's quite advantageous for you already. Now, I think you might be misunderstanding because people often see a very large distribution number on their 1099 div. But it's important to note your distribution actually isn't taxed at all. Like that's non-taxable distributions. And that line literally, at least from the way our accountants do it, is that they're just sort of like tracking all net outflows to you. So anytime you have money come to you from the platform in any way, shape, or form, doesn't matter if that is income or if you deposited money but then you withdrew the money, that gets added into distribution. So to give you some examples, if you were to stake some like USDC, like $5,000 worth, then within the calendar year you unstaked, you would actually see a $5,000. Let's say you got the whole $5,000 back. You would get a $5,000 added onto your distribution. And then obviously, if you have any actual like net income from rental income, things like that, that would be part of your distributions. But not all of it it is taxable. What is taxable is all going into if you have values there that shows your net income, then that's taxable on your 1099 div. If you don't, you basically don't have taxable income there. And then anything on the capital gains side of things, and if you have capital losses, those will sort of reflect in the 1099B as well to help you offset your income. So that's kind of how, very surface level, the taxes work. Now, the second part of the question is why 1099 and not K1s? So I think I answered that in the earlier question. Originally, the platform did launch with K1s because these are legally, multi-member partnerships, right? But it was really annoying for our users because K1s are harder to file, they're more expensive to file. And so if you had a portfolio of 30 properties, which for fractional real estate, it's kind of the benefit of it, where traditionally, you had to, say you had $1 million to invest, you usually bought 1 or 2 properties and that was it. And so your money was very concentrated. If those 2 investments didn't pan out, you really get screwed. One of the main benefits of fractional real estate investing for existing real estate investors is allowing you to sort of very easily distribute your investment funds into multiple properties and diversify in that way. And so, it's kind of really shitty, and we didn't like that fact, and our users didn't like that fact, that you were sort of penalized on a cost side if you held multiple properties and you wanted to diversify. And so we just went around asking a bunch of different firms, CPAs of hey, this has to be a solved problem, right? There's all these accounting sort of engineering wizardry stuff that people do, like, legal of course, but like ways to sort of give the best beneficial tax treatment to our users. And what one of the CPAs came up with was that, instead of having multiple K1s per property, like one K1 per property, you could, through some creative accounting, basically aggregate everything and have one 1099 for the owner's entire portfolio, and like all of their income and stuff would be aggregated into that. And that's why you now have a 1099 div and 1099B, which, again, to be fair, 1099Bs are not typically used for real estate transactions, but it's sort of like a hacky way where like it doesn't say like you're not allowed to use it for real estate transactions. And so that's like one of the ways that this all works out. All right, so moving on. I hope that answers the tax question, M1. What is the average number of tokens held by one person per property, I think is a question. Let me see if I remember this information. That's a very good question, but I think if you look at the average number, it's going to be skewed because Lofty is sort of, in terms of distributions of ownership, it's very skewed to both ends. On one end, you have a lot of owners who own like very little. They have like one token in a property, two tokens in a property. They're just trying things out. They just thought this was cool. They wanted to play around with it, and they're, maybe watching how things develop and how much money they actually make before they put in more money. So you have a ton of users on that side. Then on the other side, you have like a ton of, well, obviously not as many as the smaller ownership side, but their volume is much larger. So you have like a select number of whales, we call them, people who have very large portfolio sizes. But to give you an idea, there are people with like hundreds of thousands of dollars within a single year, sometimes, low seven figures per person in like that category. And so I remember when we look at it, which is like, what is the average LTV or lifetime value or sort of holdings of our owners on the platform? I think a little over a year ago, that number was like over $5,000 or $6,000. But that's mainly because the whales sort of skew the average towards the higher end. If you look at the median holdings per owner, I think that actually ends up, being a little bit more accurate because it factors in the skew better. And so I think that number was like $500. Like the median was $500. So I think that hopefully answers your question. Let's see, moving on to the next one. I'm just going down these in sort of the order as they've come in. So if you ask your questions just recently, I'm not going to be able to get to it until later. And if you asked earlier, then you get to hear the answer first. So the next one is there like a time horizon in which a property will exit or decide to sell and distribute the process to token holders? Great question. So by default, I actually think the holding period is 10 years. Which none of the properties have remotely reached yet because, we launched the first property on the platform in May of 2021, I think, or April. Don't quote me on the exact month, but sometime during that period. And so, we're like only 3-4 years into things. But of course, when that time limit hits, there will just sort of be an automated governance vote that goes out like, hey, originally this was planned to be a 10-year hold. Do you guys want to conform to that and just liquidate the asset now? And owners will get to vote on it. So you don't have to. You're not forced to sell out at 10 years. You're not forced to liquidate the property at a set time frame. And again, that's why we're so focused on our secondary market and why we're so focused on the real estate exchange like component of the business, because the whole idea is like you shouldn't be sort of like the problem we think traditional real estate syndications and investment work with a group of owners is that you kind of all have to conform by this one rigid agreement, which is like we're all in or nobody's in. Like if we're gonna do business together, pool our money together to make an investment together, here's the agreement and here's what we're gonna do. Like we're gonna cash out in 10 years, we're gonna do that. But who knows what happens in 10 years? Maybe the year you decide to, the holding period ends is like the worst real estate economic environment ever. Like if you have the funds to hold on to it over the down period, which doesn't last forever, like why would you not want to do that? Like why force yourself into this sort of rigid agreement? And so the entire idea is like, well, people should have the flexibility that, hey, we're in this together and we're going to operate this asset together and invest together so we get economies of scale and all that benefit. But I should have flexibility in that, if I don't want to hold it to 10 years, I can liquidate anytime I want on the secondary market, and people can vote so that if we want to hold past 10 years, we can also do that. So I think so far, at least, there are many things we need to work on the platform, but I think at least in the flexibility piece there of, hey, I can exit before these other owners, I can exit at the same time, I can choose not to exit. I think that's already working as intended, and I think people do like that aspect of the platform. Let's see. Can money be raised on Lofty to put together a down payment on a property? These are not sort of our traditional deals that we've launched on the exchange, but technically, yes. So there's nothing that prevents us from doing this. And so we're very specific about what we list. As long as we have confidence that the DAO structure and what we list is not going to be considered a security either by a state here in the US or by the SEC at the federal level, then we're happy to list it. And so we're actually in discussions. Funny you bring that up. There's some tests going on in the background. So this is one of those things you guys can kind of see what we're working on in the background, where there are people who already have funds or syndications that do real estate investment. And some of them, in addition to real estate investments, actually also hold other assets like stocks and crypto and things like that, sort of just like an investment fund. But what those people really hate is the back office work. And also, they have investors or LPs in their fund that, per what I talked about earlier, don't have any flexibility. So they're in this fund and maybe has a 5-year holding period. And then someone comes to you in year 3 and they want to exit. And that's really hard to structure and arrange. And so we've started having some of these fund managers, mostly real estate funds, come to us and say hey, I already have this fund. I already have my own investors. Can I just bring this entire thing onto Lofty's platform and use your infrastructure? And I'll just get our LPs to all make accounts. We'll distribute tokens to them pro rata to their ownership in the fund. Now I just don't have to do any back office work whatsoever. When someone makes a transaction, I don't need to hear about it. They can just use your secondary market, make that transaction. When a new owner buys in, it's all recorded on the blockchain. I just don't have to do any of these physical paperwork stuff anymore. And that's a huge value add to them, especially for these smaller fund managers. They don't have a robust back office operation because that's expensive to deal with all the compliance and all of this work. And they believe that their investors will be happier too because they get better liquidity, more flexibility, all the things our platform has to offer. So initially, these will be tokenized as private deals where, if you're a general Lofty user, you actually won't be allowed to buy into them, and it will be hidden from you. And only people who are whitelisted, so in this sort of group of LPs and existing investors they have, will be allowed to do these deals. And the idea is basically when we talk to our lawyers, hey, what would be considered a security versus not? And I'm going to oversimplify here, but in general, passive investments are securities and actively managed investments are not. But there's this very interesting thing where if a group of people actively vote to invest in something that's passive, that's actually not a security either. So an example of this would be hey, you guys create a DAO and you pool money and you buy Bitcoin and then you just hold on to the Bitcoin. And the DAO does nothing else. And the Bitcoin goes up in price and you've made money. Guess what? That's not, even though that's completely passive, that is not a security. According to current definitions of security, because you actively voted and everyone who was a member of the DAO knew what they were getting involved in and what they were trying to do, and had a sort of say in that decision. And so we're testing some of those out. And if they work out well, there's a good chance we can open up a lot of them to Lofty users as well. So because, it's just going to be disclosed to you up front, like, hey, this is going to be a fund managed by someone else. And you're participating because you want to use them as your asset manager essentially for your funds, and you're voting to like let them take on that role. And you can actually also vote to like remove them from that role, kind of like how to vote and remove a PM. So when those two things are factored in and they exist, at least according to our attorneys, they would not be deemed to be securities. So then we can open them up to everyone. But don't sort of quote me on that. Again, experimentation in the background. We'll see how it works out. But if it does work out in the way we hope it will, then it's going to open up a lot of doors for like existing investments and things both in real estate and outside of real estate to come onto our platform. So more options and choices for you guys, which I think you'll appreciate. Yes, next question is pretty quick and simple. Sorry, it's kind of getting hot in my room. Will market orders tell me what price I'm going to get if I sell a large number of tokens? Yeah. So when you do a market order, you can, there's a section, so make sure you review it very carefully before you confirm everything. There's a section that is called slippage. And so the AMM will actually quote you the price change, because as you sell each token into the pool, it's adding more selling pressure and draining liquidity funds from that pool. And so the result is you're going to tank the price a little bit. Now, obviously, the more liquidity there is, the price change is going to be more minimal, and lower liquidity, higher slippage, right? So that's the word and term you're looking for. So it'll quote you what the slippage is, and then it will also quote you the average price per token. So like if you were to sell like 300 tokens all at once, it will basically quote you the average price per token. And then that's kind of when you look at that and say like, am I comfortable with that? And if you're not, definitely don't execute on it. You're going to lose potentially lots of money, and I would feel bad. Like that's not good. So be very careful with that. When can we expect governance 2.0, and what are some of the features to be introduced? That's a pretty good question. I think it's coming sooner than most people realize. Originally, it was going to be this sort of massive overhaul where like a bunch of things just get all changed at the same time. But we kind of realized that there are certain small components that would be very valuable and give a better user experience now. And so we've sort of ripped this massive project into like multiple smaller pieces, and they're just going to come out as things goes on. And so within the next 2-3 months, we expect a couple more features to roll out. And probably hopefully before the end of the year, like all the features we plan for 2.0 will be rolled out as well. So more immediately, like you'll notice recently, like within the, in the past few months, we've put voting on chain. The next thing that's going to come out, and you guys saw this too, is that like sellers and property managers now have access to the documents folders for each property and DAO on the platform. So they can just directly upload due diligence materials, documentation, and our ops team internally is not going to handle it anymore. So things like that, like we're more and more sort of adding in those pieces. And then the next things that will kind of come out will be a forum, which is also why we haven't really done any DAO-specific Discord chats, just because we think these forums would be better. So you're going to get a forum that is built into Lofty. Like when you log in, you're just logged in as well, and then you'll post anonymously under your account. But when you post stuff, and every property will get its own forum channel, whenever you make a post, it's going to track your user dashboard, and it's going to actually say like this person owns like X number of tokens. And the idea is just to give more weight to what people are saying. And sometimes people will troll and say stupid things, and people will be able to see that and be like, wow, this person doesn't even own any tokens in this property. Like we can kind of ignore what they're saying. So that's going to come out, and we're deciding whether that will be token gated on one hand, we kind of want more transparency and build trust. So we want potential users who have not used Lofty before, or who are using Lofty but is currently not a member of a specific DAO but might have an interest in buying into it, to read historical conversations and like read the discussions to be like, hey, do I want to get in business with these people? But at the same time, we also understand that like, hey, some votes may be more, like have more private information, or they should be confidential only to the existing owners of the DAO. At which point it would make sense to be token gated, meaning that if you don't have ownership, you can't even see that group or that chat. So we're still playing around with those details, but that's kind of what's coming next. So another add-on question was about the taxes. So this is an add-on. If we add in the cost basis, would it include all the fees? Yes. So if we find out that like, hey, all these sort of quote unquote optional fees, like again, you don't have to purchase with a credit card, you could purchase with ACH and have lower fees, or a wire with no fees, then we're just gonna add all of them in. And so you can look forward to that. Operating reserve is interesting. That one we'll have to dive deeper on. Like, is that really a fee? Because yes, if you sell out the tokens, you don't get the money back. But if you stay in the DAO and the DAO sells the property and the DAO exits the asset and sort of disbands, everyone gets pro rata portions of the operating reserve, which might be what you put in originally, might be less, but in some DAOs, like they accumulate more reserve over time because they're more stable and they weren't distributed, in which case at the end when you're doing redemptions, you'll actually have more money than you originally put in. And so we just kind of need to, hope you guys bear with us on that. We just need to like really figure out like, is that even allowed? Because we're trying to be more conservative in this regard. What we don't want to do is to introduce something into the tax system here at Lofty, and then like if one of you were to get audited and like don't pass years down the line, like nobody wants to be audited by the IRS. So like we just want to make sure like everything is really above board. So yeah, that's why we're kind of taking a little bit of time on that. Can you get the actual equations used posted somewhere on how the 1099 div and Bs are generated? That's a good question. I mean, look, again, don't quote me on this, but I don't think there's any legal issues with releasing that. So, potentially what we might do is when things are more finalized, like when like things are still shifting, as you can tell. So like adding in cost basis and these fees and things like that. But eventually I hope we get to a point where it's like, hey, this is just how taxes are done. It is battle tested. It is good to go. Everyone's happy with the format. At that point, I think we'll probably like open source maybe the tax code of like how we query data to generate your tax forms on Lofty. So I hope that's sufficient in what you're looking for. There should always be a none of the above for governance votes. Yeah, I agree. I think that's very good feedback, and you're not the first person to bring that up. I think moving forward for all governance votes, there should be a default sort of like no action vote, if you will, where hey, here's a proposal. We don't like anything that's proposed in here, so we want to like preserve the status quo, which is do nothing. I think, to be fair, the vast majority of votes do already have that options, but definitely, definitely those would be included in. One thing, and one of the reasons why we never included it in not never, but like sometimes didn't add it in, was because, again, we're very careful about this like security and like regulations and stuff at Lofty. And so the idea was that if someone is an owner and proposes a vote, we cannot edit their vote in any way. And so like if they presented a list of options and they either maliciously or like just forgot to add in a no action, like Lofty can just like add one in there for you. And so that's one of the reasons why some owner proposed votes ended up not having it. But yeah, that's something I think we have a lot more comfort around now. Like it's pretty fair to have like a no action vote. Can we get more fee transparency on buy orders instead of having to click through to view them? outlook of future fees. Okay, so I'm gonna read this in full. So you guys can hear it too. Can we get more fee transparency on buy orders instead of clicking through to view them? And also the outlook of future fees if you're able to share, at least ballpark. They have consistently increased without notice. Yeah, so that's a good question. Number one on the transparency, we hear you. Absolutely, we can do that. In fact, there is already a ticket that I made, I think a month or so ago. We just haven't gone around to it yet. But it's going to fix on the UI stuff and rip out some of the fees. Roughly, it's going to show you all the fees up front, but split them into two categories so that it's also transparent to you what you pay to us and what you pay to just everything else that we sometimes can't control. So say lofty fees. So those are the fees you know for a fact you're paying to us and it's our revenue. And then the rest will just be non-lofty fees. And then you can click into that to see like the breakdown of what are the actual non-lofty fees. So if you use a credit card, the payment processor charges us a fee that gets passed on to you. So you'll see that in the non-lofty fees. Operating reserve contributions, like that doesn't come into our pocket. So you're going to see those kind of added in that category. So hopefully that will make everyone happier. It will be more transparent and it will be a format that people like. And again, that might not be where we stop with this either. People might come up with more suggestions and say, oh, this is great, but like it still kind of sucks. We want it this way. So, just it's sort of a step-by-step process. Like you give us feedback, we look into it, some things we can do, some things we can't do. We implement what we think you'll like, and then we move forward from there. And it's just an iterative process. Let's see. How do we improve the dashboard so that it's clear what the net return has been? Factoring in fees, sales status. Yeah. Okay, no, this is great. I think we are in agreement here in that, like, obviously on the UI side, we want our dashboard to be as beautiful as possible and also at the same time as clear as possible so that you can see like exactly what's going on with the properties. Is this property being listed for sale? Has it been sold? Is it time to redeem tokens? For those people that might have logged off for a few months and then, come back in one day. And also just like, hey, what are the actual net returns of the DAO and things like that. So we do plan on adding all of those things in. So I don't think there's anything here we wouldn't add or I would not be okay with adding. The only downside here is, unfortunately, these UI overhauls for the dashboard, as someone in charge of the product at Lofty and knowing what we have coming up, I've just made it so that for this year, 2025, these UI improvements are not the largest priority. We are working on lending, which I think you guys will really like. And I'll talk a bit more about that before we sign off today. But yeah, like I think we're just focused on more of those sort of core features on the platform, at least for now. Can you incorporate 1039 exchange when selling and buying? This is kind of more complicated and nuanced. And so, we've gotten advice from our CPA that claims you should be able to do this. And if you DM me, actually don't DM me, I won't respond to them for security reasons. But if you email me, I can separately send you what they said to us before, and I can also link to you the announcement that is also in Discord. But there is one caveat, which is the CPA thinks that will work, but you will still need a qualified intermediary to handle the transaction, and you will need whoever is your own CPA to be comfortable certifying and filing it for you for the 1039 exchange. And so ultimately it depends on them. You can take what our CPA said and go back to them and say, hey, they think they can do it this way. Are you comfortable doing it that way? And if both you can get the qualified intermediary to do it and also your CPA will sign off on it, then you're good to go. But if they say like, hey, I don't really get this, or I think this is too risky, I don't think that's the way it should work, then obviously, it will not work on you, for you. So it will be like sort of on an individual basis. Let's see. What am I buying and holding on the platform? So I do actually actively use the platform, and I'll tell you how I use it as well. And I think it's actually important for the founders to use it because, if we don't use it ourselves, sometimes we don't see like, hey, what features are important? Like what should we be building towards? And in a large part, Lofty exists today because we ourselves were really frustrated with how to get into real estate investing before and thought, hey, there should be a better way. So for me personally, I really like Pawnee. And I just find it very funny because it's somewhat special to me because it's the first property or like one of the first that we ever launched on Lofty. But as many of you here know that like previously a lot of the older properties, have not done well over the years. And so Pawnee kind of stands out as a large contrast in how stable it's been over the last few years. And I will say this is not financial advice, like da 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 da, do not like I'm just telling you my rationale, like do not invest based on this. Like go do your own research and all of that good stuff. But since you asked, I'm just gonna tell you. And it's very funny because despite how stable it is, like there are people who sort of lump it in with the rest of the properties and like they oversell it and the price goes down to like $29 or $32, at which point Pawnee ends up paying like 9-10% cash on cash yield and is a like no leverage on that property. That's just pure cash returns. And if you talk to any real estate investors for a relatively stable property, proven over the last 2-3 years of history, getting a 10% like yield on it is freaking phenomenal. So whenever that property dips, I just buy more tokens in it, and then I just collect rental income and I just reuse rent each month to buy more tokens and sort of build this portfolio. I'm fairly young, so I have time to sort of build it up. I don't actually put too much like additional capital into the platform. It's all just earnings from the portfolio snowballing, going back to grow the portfolio. So that's been my personal strategy. Will I be tokenizing ownership into Lofty itself? Unfortunately, no. That is very much I guess never say never. We don't know how the stock markets and traditional finance will evolve. And so, time will tell, I guess. Maybe in the future, all stocks will be tokenized. But no, at this point, Lofty is a venture funded company and we will probably raise a few more rounds. But if all things go according to plan, we will, eventually, hopefully exit, either get bought by, another company, or IPO, which I hope will be the latter. That would be really cool. So if stocks are still done in the traditional way, then I guess no. But if stocks in the future are tokenized and then we IPO, then I guess, ownership in Lofty itself will be tokenized. So someone says, show a history of proposal and discussions to public after the vote results are out. So yes, a component of that is already live. If you go to any property page and you scroll down, there's a little modo where you can see the historical updates and property votes. And you can expand on it so that it like enlarges and you can read it more in detail and scroll through it. So that part is already live. The discussions themselves currently are not, and you kind of have to manually go back. But again, when I think the forum and parts of 2.0 get rolled out for governance, it's going to be a lot easier for you to see that, and you can see the history whenever you want to. Why aren't there many California properties listed on Lofty? So we don't again, our structure is very flexible. So literally anyone can launch a property on Lofty in most instances. And so we have no control over the states or a particular city. It's just, a seller reaches out or gets referred to us and they're interested in tokenizing a property. And then we go through the process with them and they qualify, they pass a background check, things like that. And then they end up tokenizing the property. And in many cases, it just happens to not be in California. But I think right now we have 3 that's live on the platform in California. But just as we grow, it's just going to be randomized. More and more people will launch properties in different places. A few months ago we had nothing in Hawaii. Now we have 1 property there. So it just kind of depends on the sellers, I guess. So let's talk a little bit about lending since we are, since we're right on time. So I'll just take 5 minutes. We'll go 5 minutes over today. I think I answered actually most of the questions. So that's actually perfect timing. But I think I'll just end here with some immediate plans of I think new features that will be exciting to our users that's coming to the platform fairly soon, and what we're currently working on. So one of the biggest things we're focused on this year in 2025 is lending. And, for those experienced real estate investors, you'll know that like real estate and debt is like really coupled together. And honestly, like I don't think a lot of the interest in real estate would be this high, other than the fact that you're allowed to like leverage up in a way that you can't do with a lot of other assets that you're allowed to acquire. So sadly, that's one feature that is missing on Lofty. And we think it is a big sort of blocker for experienced real estate investors, for them to sort of abandon what they do in the traditional real estate market and say like, look, I'm just going to do everything on Lofty. We think this is like a big barrier to accomplishing that. And so we're focused on rolling these out this year. But the interesting thing about lending is that it can come in many different forms, right? So we're not talking about launching a single lending product in 2025. Lending is sort of like a big theme, but within that, you're going to have different types of loans structured in different ways, open to different people. And we're really excited about that. So one of the things we're working on right now, and I'm not going to dive too much into detail here because I'm hoping to do some PR press around this, and I want to give whoever like a mainstream publication that wants to do this with us, I'm going to give them the breaking news and an exclusive. So hopefully that'll like help us rope in some interest. But there was two friends that were interested in doing a peer-to-peer loan, but it's a crypto-based loan that is secured by one of their real estate. So essentially, one friend is like, hey, I want to borrow a bunch of Bitcoin and Ethereum from you. And we're talking like very large amounts, in the 7-figure amounts between the two assets. And in exchange, I'm going to take my really, really nice property in Florida that's also, appraised multi-million-dollar property. I'm going to give that to you as collateral. So if I don't pay back this loan, you get to take my house. That's how they want to structure this. And they actually went around to a bunch of different places to like, okay, where can we do this? How do we even do this? And realized that using a traditional law firm and like escrow process wasn't going to work. Traditional title company wasn't going to work. And through that research, they found out about Lofty. And so they approached us to be like, hey, can you help us structure this? So they actually paid us a one-time fee to basically build this smart contract for them, where the two friends will be able to operate their entire loan, like through its entire life cycle, on the Lofty platform. So they'll tokenize the property. The tokens will be locked as collateral in the smart contracts. They'll only be unlocked when the borrower repays the specific amounts of crypto back in full. And if they don't, they can be liquidated, at which point the tokens go to the lender, and then they now become the owner of the house. So like auto liquidation, like all those cool things that you can do for lending now, because the real estate is tokenized and not owned in the traditional way. So all that, like through the debt servicing, like paying the monthly interest, will all be done through Lofty. So I think that's really cool. And to my knowledge, I don't know if people have done this before. That's why I think there might be some PR and press around this, where it's like the first case of, like a peer-to-peer, decentralized like lending, that people are doing. It kind of showcases that as the technology develops, more and more people are taking the leap and trying to do this, and trying to structure custom loans between themselves and family or friends. But what's most exciting about that is the contract we build for them. We're going to repurpose, and we're actually going to launch it fairly soon, like within the next month, 2 months on Lofty, where you can basically go on this new dashboard and sort of specify terms that you're interested in, and basically request a loan, and then pledge collateral in any of the properties that's tradable on the Lofty exchange. So for example, you could say like, hey, like I'm some random user, I would love a loan at like 9% fixed rate, for X years, term, whatever duration, and I'm gonna pledge like $90,000 worth of 88 Madison tokens to this loan. And then people can then go to there and be like, oh, I'm interested in like lending for that because I like the collateral being used. And I'm gonna just, because worst case, I like owning ADA Madison. I'll take the tokens, and the liquidity pool is doing well, prices are doing well. I can just sell the tokens and get my principal back. So sort of this marketplace for personal loans backed by real estate is basically going to roll out like fairly soon on Lofty. So that's going to be the first product that comes out of lending this year. And then obviously the biggest one, but also the hardest one to do, is we want to roll out basically like we're rebuilding mortgages on chain, where you can then come purchase and make any investment on Lofty and then just say like, hey, I'm going to use ADA Madison as an example. I like this property. I'm going to put 20% down in my token purchase, so whatever that much cash is, and I'm going to borrow up to 80% on this transaction. So it allows you to buy into like a bigger transaction, but you only put down 20% of the cash for that one. And then the smart contracts will handle liquidation for the lender, where, if you don't pay, then your position gets liquidated. They get automatically sold through the liquidity pool, and the USDC, the principal, is then automatically returned back to the lender, where they can then immediately reuse that for making additional loans. So it's simultaneously going to plug into like both decentralized and centralized lenders, because we think you need centralized lenders to scale this feature. And so there's going to be like a lending pool that we'll create for this that anyone can participate in, where this lending pool will be able to make these loans for people to purchase with. But at the same time, like traditional mortgage brokers and things like that, and some like sort of Wall Street folks, I'm in conversations now, very early stages, but the idea is to get people who are doing like traditional lending for real estate, or people who own mortgage-backed securities, who want to invest in mortgage-backed securities, to basically plug into our system and just lend capital through Lofty to our users. And the idea is there basically that because the way these tokenized real estate assets like work and how quickly they can be moved around and traded, it basically reduces the default risk for the lender to virtually zero. And yeah, so it should just be a much significant improvement and a better process for them on their principal. And so we're hoping like once the platform is live, traditional lenders will plug into Lofty, decentralized pools will plug into Lofty, and then when you borrow as a borrower, you just get quoted the best rate. And this kind of pegs the traditional lenders with decentralized finance, and just they compete like for borrowers, especially for like good quality high credit borrowers. So yeah, that's the sort of main big feature we want to build. But prior to launching that, you're gonna see, in addition to what I talked about earlier, like multiple other lending products as well. Yeah. So I know there are some questions about like credit checks for the mortgages and things like that. Don't worry, they will. We have already thought about them. A lot of it will just be the same way, like how you can get approved online now for loans by entering certain information about yourself. Well, guess what? You already KYC'd on Lofty, so we can just, with your permission, send that information over and get like a soft credit check for you as well. And then you'll actually have a credit score attached to your wallet. So when you make loans, not only are there these sort of decentralized mechanism in place to protect the lender from default and non-payment, but also they get to see traditional indicators too, like, oh, this person has like an 800 credit score, like probably a pretty safe bet, right? Things like that. So we're gonna bring a lot of those traditional data points on chain as well, and that's gonna be, I think, really cool and interesting too. So we've gone a little bit over, but thank you guys so much for joining me for our very first live stream at Lofty. I hope you like this format. I think it's pretty cool where I just get to directly talk to you like this. I join Discord. I try to do it frequently, but there's no like specific time I do it. So some weeks I'm more active, some weeks I'm less. Information is hard to find. So like if you tag me in something like, and I just don't see it for a week, I probably will miss it. I think this is a better way to get my attention and sort of ask questions, which in many cases other users will probably have the same questions. And yeah, and this is publicly available to all, and I have it recorded this time as well, so other people can watch it later. But my hope is in the future, if we end up doing more of this and you guys like this format, we'll do it on a reoccurring basis once a month, sort of like a Lofty town hall, where I get to talk about Lofty upcoming features and take feedback and answer questions. And I also hope new users and people who are interested in Lofty but haven't pulled the trigger get to come watch these as well and maybe get their questions answered. That might then lead them to have the confidence to pull the trigger and make their first purchase. So yeah, long term, I hope it evolves into that. After this, I will get more feedback on Discord. You guys let me know. Thank you so much for your time. And the time is going to be variable as well. We'll see. Next time, people might vote for a different session. So I'm always going to try to do it at a time that obviously works for me, but at the same time works for as many of our users as well, because I want the live interaction if possible. So yeah, that's it. I hope I was able to answer everything. And if not, just ping me and I'm happy to answer them over email and personally. Thank you so much, everyone, for your time and for joining me here. This was a ton of fun. So yeah, with that said, I'm going to end it here. All right, guys, have a wonderful day and a great weekend. Bye-bye.